discoing. I hope you're loving your life. This one and only life. It's too short. Live it up and disco. Whee! I hope you're doing fine. I hope you're doing wonderful. Please, before I start, like, if you like, even if you don't like, dislike, so this thing gets circulated more. Please comment as well. It helps the algo circulate the video. Like, dislike, comment, do whatever you can, please. Do your part and help me circulate this video. And I'm giving you my time. Please give me your participation. Thank you very much. This is a presentation for gold, silver, the stock market, the VIX, the dollar, the Euro USD, all of the above. Okay, I'm gonna start with the VIX in the weekly time frame. What I like usually, I like the nice and simple things. I don't like to complicate things and bring like academic stuff, just regular stuff, easy for the eye to understand. You don't have to be a technician, you don't have to be anything. Just watch and see the pattern repeat themselves. So what happened this week for the VIX, a pattern that worked 100% of the time for the last 6 years, and it is the bullish disco combo with a breakout in the weekly time frame. And you can see it, you just allow your eye to see, this happened here, this happened here, and so on and so forth. And you could see how successful this pattern is. The success rate is 100%. So what is guaranteed historically is at least a week or two of a price expansion to the upside for the VIX, and as a result of that, that would be a retracement or a sell-off or a meltdown sometimes, like what happened here during the pandemic in the stock market. So for me, if as a disciplined technicians, cash will outperform everything at least for the next week, maybe two. Okay, so this is the VIX in the weekly time frame. I'm not contrarian. I'm not criticizing the Fed. I'm not bringing conspiracy theories. I'm just looking at the chart with this sell signal, which is buy in the VIX, and sell in the stock market in the weekly time frame. Alrighty. Another thing, this is the UUP, the ETF for the dollar, and also every time you have, since 2018, you have a bullish MACD over the baseline or the zero line. This is the MACD only for the UUP, no price action. And if it's above that with a bullish formation, something happened in the market, and you can see it on your own time. So also the percentage in the past is 100% of occurrence. It does not, even if it goes down half a percentage or half basis point in the stock market. Okay, so that tells me do not go long. I'm telling myself cash will outperform everything in the next week or two based on the past. No contrarian views. I'm not the smartest guy in the room. I just look at the stuff. And so MACD above the zero line. No for the for its negative correlation with precious metals and the market. I'm talking about the UUP, which is the dollar. So if I say UUP, I mean the dollar usually. So don't get confused. So this is the MACD only in the daily time frame for the UUP. And this is my Elliott wave count in daily time frame. And I don't like Elliott like I used to because it gives me narratives. It does not allow me, even though you change the counts, but at the time of making the count, you get so attached emotionally. So this one, I put it in the back of my mind. So we have 3 waves up until September. We have a 4th wave down, corrective wave, and a breakout. And now we are registered in the 5th wave, which means an impulsive move. Sometime it is truncated within the 3rd move. sometimes it makes a higher high. So either truncated fifth wave or a higher high fifth wave. For sure, when it comes to Elliott wave theory, we have an impulsive move. For sure. And if you don't believe that, shame on you. If you are an Elliottician and you think this is not a possibility, shame on you. If you don't believe in Elliott, it's okay. It's your prerogative. If you don't believe in technical analysis, it's okay. But if you believe in any of these two and you deny it, shame on you. All right. So this is the Elliott wave count in the UUP. I'm going to call the dollar from now on so it doesn't confuse people. All righty. So this is the RSI only in the dollar. And I posted this some times ago in Twitter. And also I talked about it in a video about this formation. Usually it's a bottom formation in the dollar. When you miss the 30 level in the RSI and the price action makes consecutive lower lows and you don't do that, that's always a bottom information. And believe it or not, 100% of the time this happened. That's why I sold my gold position at that time. And I was really, I believed, rephrase it now, I believed in the topping of silver and gold. And I did that in my Twitter and in my videos based on many things. Some of them are Elliott, some of them are the RSI findings of mine, and some of them are the collective psychology of people. Okay? So good deal. So what happened? Will you miss it? Now, you had a bottom. On the opposite way, when you hit 70 and you registered it, that means the top is not in. Capiche? So that means even if you go down, you will have another go in the price action. And sometimes you miss the 70 in the RSI. So I don't know. It's visual. What I'm saying is always visual. So you don't have to have an ability in quantitative methods. Just look, see. You could put, I didn't put the price action on the top of it. So you could do it yourself. Every time you go over that, you will have a go. You will have a go. You will have a go. Okay? This one, you missed it in October. Capiche? So that's the RSI finding in the dollar. From now on, I'm going to say the dollar. Good deal. Okay, I talked about that. What is wrong with me? Sorry. I say these things sometimes. All right, this is conventional technical analysis in the UUP. Even if you don't believe in that, if you believe in conventional technical analysis and you don't recognize this pattern, what is wrong with you? What is wrong with you? Do you have an agenda? Why are you hiding that? Okay? If you don't believe in technical analysis, it's okay. But if you believe in it and you go on Twitter and you say other things, shame on you. So you have left shoulder, head, right shoulder, break out. It is okay to have a throwback to test that and go back up. Okay? As far as that chart is concerned, conventional technical analysis, we are in breakout mode in the daily time frame for the dollar of an inverted head and shoulder. This came with RSI over 70, which means if we have a throwback, we will resume the price action if history repeat itself. If you don't think this is bullish, wait for a couple of weeks and find out this yourself and have an open mind. If you don't believe in technical analysis, have an open mind, and you will change your mind. The technicians are not stupid people. We don't believe in mumbo jumbo. I don't have a job. This is my job. This is my 9 to 5. So I put all my life on the line, just for that. I don't think I'm stupid. So maybe I am, but I don't think I'm stupid. So if you don't believe in technical analysis, just keep an open mind. So this is a breakout in an inverted head and shoulder in the dollar. Capiche? Okay. This is the weekly time frame for the dollar, stochastic only. And it's also 100% of the time, once you register this high number in stochastic, something, a retracement or a severe pullback in in the market. When it comes out of oversold the stochastic in a weekly time frame, something happened in the market. Sometimes it takes a couple of weeks until it hits over 80, then it retraces quickly, like what happened here in April 2021, and sometimes it stays. But the success rate of this in the past is 100%. So if you don't believe in technical analysis, you're back testing yourself. So I talked about the MACD over the zero line for the dollar. I talked about the VIX, the weekly time frame buying signal. I talked about this stochastic finding in the weekly time frame. I talked about the inverted head and shoulder in the dollar and the success rate. Except with the inverted head and shoulder, the success rate is 100%. As far as the inverted head and shoulder, sometimes it fails, sometimes doesn't. But with the RSI over 70, the possibility of success is extreme. I should have talked about that. Let me talk about the measured move for the breakout. So how would you do the measured move? You do the measured move. The high is 28.33. The low is 27.21 equals to, it becomes a plus. So that result plus 28.33 will give you the full measure move. That will take some time with Fibonacci extensions. We'll start with 127, 138, 162, then the full measure move is 2, which is the final result. So definitely we are in the bullish mode in the dollar as far as many things are concerned. Capisce? Good deal. So I talked about the success rate for all this stuff, and including the inverted head and shoulder. The Euro USD is the same. Also, it's the same as the UUP in the weekly time frame, inverted like a mirror image. Capisce? So you can do it in your own time. It's also high percentage of the time, almost 90% of the time, something will happen in the market. Good deal. So let's talk about the price action for the Dow Industrial. We have a breakdown. So if you don't believe in technical analysis, it's okay. But if you believe in it and you ignore this, shame on you. So this is a breakdown in this consolidation area that came with a bearish disco combo. Okay? And it's not, it never been a good time. Okay? This is the daily time frame. The weekly time frame is also something that is 100% of the time in the past, in the last at least 10 years. Every time you have this setup, breakdown, and a bearish disco combo in the weekly time frame where you have RSI below 50, bearish MACD, bearish stochastic bearish MACD. This has never been the bottom, which means 32,643.48 has never been the bottom when you have this bearish setup. You might have another 2 weeks of retracements, then a bottom will take place. So if you bought last Friday, according to the past, that was not a smart move in the weekly time frame. So I'm talking about 100% of the time. If you notice, it's not 50-50 possibility. I'm talking about 100% of the time. Let me look for an S&P thing just to show another thing that I did in the past. Okay, even in S&P, I tweeted this some times ago. Got a lot of likes and a lot of people saw that thing. Okay, so we had trend line, breakdown with the breakaway gap right here. Even though the bottom Fishers bought in Feb 17th, and I put that in the video, last video. That was not a smart move because you have a breakdown, and that's what happened. In addition to that, the setup will have bearish divergence and bearish MACD and RSI below 80. Usually, the stochastic will give you the sell signal before the price action because price follow momentums. So once you have a breakdown in the stochastic, sell signal is there. And believe it or not, the sell signal was Feb 6th. And it's the truth. The price follow momentum. This happened all the time. What's the percentage of this setup in the past? 100%. 100% in the past. 100%. Okay? You have, here you have a broadening top, a bearish reversal pattern, breakdown in the stochastic comes with a bearish MACD, RSI, so on and so forth. You have a head and shoulder here. See? The breakdown happened before that thing, okay? I'm not selling you things. I'm not selling you a product, so I'm not lying. I hope. I hope my intentions are good, but I really am not selling anything at all. I'm just saying my findings here. And it worked 100% in the past. And I did tweet that at that time. And I made the video for it. Okay, good deal. So I talked about this finding in S&P, the Dow, the daily and weekly time frame. Silver is the same. I did that with RSI. I put them on top of each other in Twitter for the 3 people that saw it. And hopefully those 3 people did not buy gold or silver at that time. So you missed that 70 thing in SLV, then down you went. And also it's vice versa. When you have a stochastic that goes below 30 with this negative divergence, that means the bottom is not in. It happened 100% in the past. So this one you see here, it went down, down, down. You go up, you retest the price action while you don't go below 30 in the RSI. So also SLV, as far as the RSI is concerned, did not make a bottom yet. Capiche? Good deal. And also in the price action, as I tweeted and I talked about it before, breakaway gap, midway range, gap, exhaustion gap, and up we went. And now we have breakaway gap. Could be a midway range here. Only time will tell. So gaps are not good at all. You have stochastic below 20, and usually when you have that, rallies always are sold when you have stochastic below 20. And whoa, the infamous RSI below 70. So definitely bearish on SLV, not because I'm contrarian, not because I don't understand the financial system, just because the chart. Okay, it's amazing how many people in the market did not bother themselves to understand behavioral finance. Technical analysis is the behavior of the market participants. The GLD has the same message as the SLV with the same setups, and also stochastic below 20, yet the RSI did not register that scary below 30. So we might bottom in GLD, but I doubt that. If you watch, you know that we have head and shoulder and breakdown is in progress. Okay, this is for the GLD. So here I'm going to talk about, I don't have to bring up the GDX or Newmont chart, I could use GLD Newmont in the ratio, GLD Newmont ratio, and GLD SLV ratio. And these ratios are very important for the gold mining space. And this is the weekly time frame for GLD Newmont. And we had a breakout, and this breakout happened 3 weeks ago, and we know what happened since the last 3 weeks for the gold mining space. So you had a bull flag and a breakout. This came with bullish disco combo on the ratio, which means bearish in the gold mining space. And if you see, we're going back to the 100% success rate in the past. And if you see that, this pattern always bring havoc to the gold mining space all that time. It does not mean it's forever. It's for a couple of weeks, sometimes a couple of months, 4, 6, 7, 8 months. The longest I've seen without a rally is 9 months. Okay, so it could be fast, like what happened here in Feb 1st, and that was things happen. But as far as the technicians are concerned, such as I will own cash rather than owning gold mining space, while this sell signal in the gold mining space takes place, and a price expansion signal for the gold Newmont ratio. The higher the ratio is, the bad for the gold mining space. Okay, so I don't have to discuss it further. It is obvious. Okay, same as this one. This is GLD SLV, which means the gold silver ratio. The higher the ratio, the worse it is for future expectation for silver. And if this is true, it is bad for gold mining space. I use these two, the gold GLD SLV ratio and GLD Newmont ratio, even though it gives me the same result, but some people use it. So I just present it here to show my theory. So you have double kiss formation and breakout, even though you have a negative divergence in stochastic, but stochastic moves fast usually. So you had a breakout in the downtrend right here, and it's going up. So this could change, and I will understand why it changes because of negative divergence. But nevertheless, we have a breakout in the stochastic in the weekly time frame, and a kiss formation in the MACD in the weekly time, in the daily time frame. I'm sorry, I'm terribly sorry. In the daily time frame, and RSI over 70 in the daily time frame, which means it is not the top of this ratio. That means GLD is expected to outperform silver for at least a week or two. Capiche? So please like if you like, and dislike if you dislike. Please comment. Please help me circulate this video. I appreciate that. And do remember, this goes forever!